Hello, traders. Gary Wagner here. Just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, December the 6th, 2021, and this is the daily report for gold and silver. Although dollar strength and higher yields brought gold down, the big question will be the inflationary index vis-a-vis the CPI, which will be released on Friday, because that will be a key component in shaping the monetary policy of the Federal Reserve, which will meet on the 14th and conclude on the 15th of this month. Of course, if inflation continues to go higher, it's bullish for gold on one aspect, but really more bearish because it will force the hand of the Federal Reserve to raise rates sooner and to raise them higher than they had originally perceived. A combination of dollar strength and higher yields on United States 10-year Treasury notes were the major components moving gold lower today, fractionally lower, down $4.60, about 0.25%, with the most active February contract currently fixed at $1,779.30. That is a net decline, as I said, of about 0.25%. And when we look at the dollar was up by almost 0.2%. And as you know, we are flat, both gold and silver, futures and Forex. However, we have maintained our long position in the Spider Gold Trust, GLD. That is currently at 166.22. This first chart that we're looking at is a weekly candlestick chart of the U.S. dollar index. Does have a Fibonacci retracement set, fairly long term, begins at the onset of 2018. Index was at 88.20, up to these highs at 103.96. Those occurred at the beginning of 2020. Right now, we have just flirted and crossed and closed above the 50% retracement. That comes in at 96.08. And when we look at any historical data at this particular price point, although it's fuzzy, we can see that for a long period of time, well over a year, we traded within a range just above and just below this price point. And that occurred through the end of 2018, 19, up till 2020 when we hit these lows, before going to these highs and then selling off fairly dramatically. This is an important technical level for the dollar to hold if we expect it to move higher. Where do we see resistance? As high as 98. This next chart is also a weekly chart of the dollar index, although it is in Heikin-Ashi format. And you can see literally from about the beginning of June this year, when we saw the dollar index at about 89, we have had a slow and methodical move up. We've had periods of, I would call it moderate to strong trends, such as right in here, in that you have all candles with the absence of lower wicks. You now see it picking up steam once again. Now, today, we did get a small lower tail and a small body, but the previous 2 days have been relatively large-bodied candles, which tells me there is definitely strength in the dollar currently. Interesting action in gold over the last few trading days. If you recall from Thursday, the market opened within this compression triangle. However, it closed well below that, actually breaking down through the 23% retracement below 1771. Then on Friday, we actually opened below the compression triangle, but closed just in it. And today, we opened just above it and closed just within it. And now trading overseas, we are right inside this particular band. Now, the band I'm referring to is no longer just the compression triangle. It is a range that we have talked about. The short end of the range comes in between 1784 and 1771, because 1771 is a Fibonacci harmonics. It is both the 61.8% of that long data set and the 23% retracement of the short data set. It is all going to be about the CPI that comes out on Friday. If we see it reduced by a bit, it might take some pressure off of the Federal Reserve to act in an overly aggressive manner. While they'll still probably shorten the tapering timeline, they still will probably raise rates next year. They might only opt for one rate hike rather than two or three. So it is going to be key and critical. And the FOMC meeting begins in roughly just over a week from today. And so we should see muted action. One interesting aspect of a Henkinashi or Japanese average chart is on a candlestick chart, we have 4 consecutive days of lower pricing, just from here to here, this being Fridays. Today was a down day, but we're getting a green Henkinashi candle because it opened at the midpoint, which is where they fixed it. It does have a lower and upper wick, so it's not that strong, but it could be the beginning of a pivotal candle, or more likely a period of consolidation, as we spoke about in other areas of the market, such as right here when you get a series of small body candles, alternating candle color, and you're really not getting a lot of price change. Pivotal candles, such as we see at this top, tend to be extremely small-bodied candles. They typically occur when you have a higher high than the previous day and the highest high during a rally on the way up, or on the way down, one of the lowest lows as you get here. Nonetheless, we are getting alternating colors. What it's telling us is we're probably consolidating. And we get that same anomaly with a 3-line break chart. Even though gold closed lower on the day, you can see that it is a green candle. It isn't projecting higher pricing because it is not in cyan. Lastly, a quick look at silver. That did sell off in New York as it trades overseas. It is up about 14 cents from the closing price in New York at 22.40 cents. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.